Thank you so much, everyone, for introducing yourselves, and I'm happy to have you here. And we're going to begin the webinar. And Joy, I do believe that EasyW Comp is a great option, especially since you mentioned you do not like those hefty year-end audits and you would like to free up some cash flow. So as I mentioned before, if you guys have any questions, there is a chat box for you to ask those questions that you may have along the way. And at the end of the webinar, we'll have time for a Q&A with Belinda, who just introduced herself as one of our licensed insurance agents. We are going to try to keep this webinar nice and short for you guys, so about 30 minutes, which will include the 10 minutes or so for Q&A. As a legal disclaimer, no insurance products are being offered during this webinar. This webinar is strictly for educational purposes, and we only offer insurance products after consultation with a licensed agent. So we'll begin with the basics of workers' comp. So workers' compensation is insurance which covers your employees who experience work-related injuries or illnesses. Workers' compensation is mandatory in most states for businesses with at least one employee. Requirements do vary by state, but if you would like to learn more about your state's requirements, you can do so by scheduling a time to speak with one of our licensed agents. Any general questions could be answered again at the end of the webinar, but if it is a more in-depth question about your state's requirements, then you would need to contact one of our licensed insurance agents, and I will be providing that contact information at the end of the webinar. So whether your state requires it or not, we still recommend to have workers' comp because your company is still financially responsible for any injuries or illnesses sustained by your employees while on the job. So what is covered under workers' compensation? When an employee is injured or experiences a work-related illness, your workers' comp policy covers medical expenses, lost wages, ongoing care costs, and funeral expenses. So an example for each, an example of medical expenses would be visits to the doctor, urgent care facility, or the emergency room, also any prescriptions or follow-up visits or surgeries, and so on. Lost wages not only cover a full day's work missed, but also any hours taken off for ongoing care. And ongoing care would include physical therapy, follow-up appointments, and more. So now we'll get down to the good stuff. We're going to go ahead and go over traditional workers' comp and compare it to pay-as-you-go workers' comp with EasyW Comp. And first, we'll begin by discussing traditional workers' comp. So when you're looking to purchase a traditional workers' comp policy, there are a few things that you need to consider. Number one, you'll have to estimate your annual payroll. So based on your payroll over the past few years, or based on the projections you may have if you're a new business, how much do you believe your company will pay during the year? Number two would be, now based on your company's payroll, industry, and risk level, you'll be given an insurance premium. And to begin coverage, you'll need to make a down payment of 25% of that premium. You're able to pay the remaining 75% in installments, and that may vary depending on the carrier. At the end of the year, you'll have an audit, which Joy mentioned, to determine if you owe a balance or if a refund is owed to you. If you underpaid, then you must pay the remaining balance. If you overpaid, then a refund is due to you. However, refunds take up to 4 weeks to receive, and refunds are not credited to your renewal down payment. Finally, in order to continue coverage for the next year, you must pay 25% down on your new premium. And if you do owe a balance, not only do you have to pay that 25% down, but you have to pay that balance that's due, which is usually an unpleasant and unexpected surprise. Now let's take a look at how EasyW Comp works. First, there's no down payment to get started, so that helps you with your cash flow right away. Your premiums are not estimated on an annual payroll, but are calculated based on each individual payroll run. And don't worry, you don't have to make those calculations. They're done by the payroll company or corporate payroll services and insurance companies. So for example, Say you run payroll biweekly and one payroll totaled $10,000, and then say the next payroll totaled $7,000 because someone quit or wasn't working, or there was less work to do that pay period. Your premium will be calculated based on that $7,000 figure for that second payroll, meaning your workers' comp for that second payroll will be 30% lower than it was on the first payroll because your actual payroll was 30% lower. Your premiums can be calculated with each payroll because we are connected to the insurance companies and we transmit the data to them with each payroll that you run. Depending on the company, we either make the calculation of the amount due and it comes out of your payroll, or it comes out with your payroll, or we transmit the payroll data to the insurance company and they make the calculations and they debit your account for the premium a few days later. Now, unlike traditional workers' comp insurance, your year-end audits are simplified. Usually very little is due to the insurance company or very little is owed back to you, so your cash flow is smoothed out. There is also no money down to renew your policy at the beginning of the next year, so your cash flow is simplified and you don't have an unexpected large down payment due. So now we'll go over a few examples that illustrates what we've talked about. Please keep in mind these examples are for educational purposes only and do not reflect real calculated premiums. So Company A has a traditional workers' comp policy. They estimated their annual payroll to be $300,000. So let's say they have a rate of 1%, but note that workers' compensation insurance rates and premiums can vary by state, and they are based on several variables, including your industry, the number of employees you have, and your company's safety record. So just for this example, let's say it's 1%. So this will make their annual premium $3,000. In order to get started, they need to pay $750 down and pay the remaining $2,250 in installments over the next few months. But let's say at the end of the year, their actual payroll was only $150,000 because they didn't have as many employees or they had less work to do. A refund would be due to them after their policy year and audit is complete, but they would have to wait weeks to get that refund. And say, for example, they want to have that refund again credited to the down payment because they don't have the money for the down payment. Unfortunately, that's not how that works. They will have to wait weeks for that refund and they will have to pay a down payment. Company B also has traditional workers' comp. Like the previous company, their annual payroll is estimated to be $300,000 and their annual premium is calculated as $3,000. So again, they will be paying $750 down, the remaining $2,250 in installments, but here is where things change. So they had lots of work, they had to hire more people, so the actual payroll was twice what they originally estimated. So it was $600,000. So now they owe an additional $3,000 after the policy year and audit, which they most likely were not expecting. Plus now they have to pay a down payment, which will be larger than the last. So the down payment will be $1,500 because of their increased payroll. Now Company C has pay-as-you-go workers' comp. There is no down payment due regardless of the estimated payroll or the estimated annual payroll. The workers' compensation insurance premium is calculated with each payroll that they run. And as each payroll goes up and down, the premium fluctuates with it. So if the payroll goes up, the premium goes up. If the payroll goes down, the premium goes down. That simplifies their year-end audit and almost always results in nothing or very little due at the policy year end. The only exception would be if an employee was misclassified in either a less risky or more risky occupation, but that is also true with traditional workers' comp. So with either traditional or pay-as-you-go workers' comp, you want to make sure all your employees are properly classified according to their job duties. Last, with Company C, there is no renewal down payment due for the policy year because it's pay-as-you-go. So what is EasyW Comp? EasyW Comp is provided by Corporate Insurance Solutions and Corporate Payroll Services. EasyW Comp helps small to mid-sized businesses nationwide with workers' comp and other insurance. Now, although our most popular offering is pay-as-you-go workers' comp due to how it improves cash flow for businesses at no additional cost, We do also offer traditional workers' comp as well, and we do our best to get you the best rate possible either way. The rates are the same for pay-as-you-go and traditional workers' comp. It's just the cash flow is better and smoother with pay-as-you-go workers' comp. So many people, of course, would like to know, does their company qualify? So in order to find out if your company qualifies, you'll need to speak with a licensed insurance agent. However, I do have a few general things that I can share. For example, if the only employee of the company is the owner, then you do not need to get workers' comp insurance. Now, to be able to utilize pay-as-you-go workers' comp, you have to run payrolls on a consistent basis. So for example, if you pay weekly and then stop paying for 4 weeks, for some reason, then the insurance company can cancel your policy. To learn more about if your company qualifies and to get a quote, you can contact Belinda, who is on the call, and whose contact information will be displayed shortly. Belinda is happy to answer any questions you have. If you've submitted any questions through the chat function, I will read those to Belinda so she can answer your questions. So if you do have any questions beyond the ones that were asked here today, you can go ahead and reach out to one of our licensed insurance agents at info@ezwcomp.com. You can reach out by phone by calling 678-567-6323, or you can go to our website to fill out a form. I will make that link clickable when I send out the presentation. Thank you everyone for attending, and I really appreciate your time today. If you, again, have any questions, here's the contact information on the screen, and I will be sending out a recording of this webinar as well as the slides as soon as this webinar ends. I hope you guys have a great rest of your morning.